presents Banner Finance year-end close, an approach to having a successful new year. We're delighted that so many of you have been able to join us together for this important and timely conversation. I'd like to start with some housekeeping. So everyone should have joined this session in mute. We would ask that you continue to stay muted throughout the presentation, only to reduce any background noise, but you're certainly welcome to ask any questions that you might have in the chat. We'll also open up the floor for questions at the end of the presentation. My name is Carol Thomas, and Grace, can you advance the slides for me, please?
Perhaps.
I'll keep talking while there we go. My name is Carol Thomas, and I am the Senior Vice President here at Ferrilli, and I manage our Banner practice. I do want to reinforce that we will be sending a link to the recording following this, as well as some additional materials that Grace has compiled for everyone who attends. And with that, I'd like to introduce Grace Hill, who is one of our senior consultants here at Ferrilli, who has extensive background with Banner, having implemented it at the school where she worked many years ago, and subsequently spending lots of time with lots of different schools managing and supporting their efforts as it relates to Banner Finance. With that, I'm going to turn it over to Grace to guide you through this session today. So thank you, Grace, and thank you all for being here.
Thank you, everyone, for being here. It's really an honor to be able to provide you this insight and overview. What we're going to be looking at this section is year-end close, and hopefully this will facilitate a much deeper understanding of the steps needed, not only to do year-end close, but the most critical point of setting up what is necessary to ensure a successful year-end close. Please do not be put back or put off by the amount of information that I have included on these slides. I want to take a moment just to let you know, I'm going to be doing that Reader's Digest version, but because you can actually see these slides, get these slides afterwards, I definitely want you to have enough information loaded on them where you can go step by step and see exactly what I'm talking about today. The importance of setting up those parameters on your chart of account page is the importance of laying the track that those processes that actually run, the jobs that run year-end close, will follow. You have a number of parameters that are located there, and with each parameter, there's a choice that you must make, and the choice that you make actually guides how Banner will do your year-end close processes for you. So when it comes to the fields, what's in them, what does it mean? This is the meat and the potatoes of what it will take in order to have a successful year-end close. So don't be upset by the amount of information. It's really a learning tool for you to understand. There are a lot of different rule codes that we use for year-end that are really only there to support that year-end close process. So although you may be well aware of other rule codes that Banner uses to complete processes, the year-end close rule codes are the real heavy lifters. They do multiple things behind the stage. They set flags, and they make sure that everything comes across exactly as you need. We're going to look at each one of those sections today so that you can fully understand what these fields bring to the table and what they mean. The importance of this is many of you just run a process. Every year you run 4 jobs, 5 jobs, and you don't quite understand what's happening. It's just been an assignment to you. Maybe there's a lot of cleanup work that happens after, and you're thinking, boy, I wish it would do something different. Looking at these parameters that we've laid out for you will give you a deeper understanding of just what each setting means. So when you're looking at your encumbrance parameter, you're actually looking at the parameter that's going to tell you how to bring over any encumbrance from your current year into your new year. It's very important that you understand this setup and what changing the natural defaults of Banner will do. When you create an encumbrance in Banner, the encumbrance is always created as uncommitted. That's just how Banner works. The only time you have an option to change that is when you're actually doing your year-end close. Then Banner will ask, do you want to bring this document over, this purchase over as committed or uncommitted? So to understand the difference between the two is a necessity, because if you choose the wrong one and you think you can roll it forward year after year, no. If you roll it over committed, you've got one more year to roll it over, and then Banner will stop you. Committed simply means if I'm going to roll something over committed, the budget that's attached to that purchase order or that general encumbrance is actually going to remain there. And for an example, if that PO was for $100, the invoice came in at 95. Typically now in the current process, if you were to pay it as a final, it would liquidate, it would pay the 95, liquidate the 5, and put that back to the FOPL, which it was assigned to, so that you could reuse it. That's because they're all committed, uncommitted when you create them in Banner. At the point of doing a fiscal year end, you say you want it committed, that PO will close, but that $5 closes on that PO. It does not liquidate back to the original encumbrance for that department or organization to use. Once again, if you choose committed, it's only going to roll forward one more year, and that's it. Banner will stop it after that. You would have to create a new PO if all of those charges were not completed. Once again, there's going to be a budget disposition field on that same encumbrance parameter. Now, once again, if you've made a decision to roll something over committed or uncommitted, then there are restrictions, there are rules that you have to follow with your budget disposition field. So I've given here a complete overview of what those rules are and what action it would take when you select those rules. So choices that you make have to be followed through in order for the process to be successful for you. Once again, once you've done that budget disposition, you're going to actually get to a field that says, what percentage of this budget at what disposition am I bringing over? You can bring over 100% of that budget, 50% of that budget. Typically, you're either going to choose 100% or zero. The one thing that I do want to remind you is when Banner is looking at that, if you have actually made payments on an encumbrance that you're bringing over, it's only going to bring over 100% of the remaining balance. It's not going to go and attach everything to it. It's very math smart. It's going to calculate that, and it's going to bring over 100% of what was remaining on that purchase order when you decided to roll it forward. Once again, all of the slides that I spoke to previous to this, these are the actual fields that you would have to make those decisions and set. After you've done that, you want to bring your budget forward. So your budget carry forward parameter is also very important because Banner says, what type of budget do you want to bring forward? It gives you options here. Now, what you know or should know is certain journal types, budgetary journal types, actually determine whether it's original budget or adjusted budget or temporary budget or permanent budget. So if you know you've been using BDO1s for your original budget and BDO2s for your adjusted budget, Banner actually looks at that and it says, you want to bring over original and any adjustments? And it reads those rule codes that you've used in the past, and it knows exactly which budgets to bring over and which budgets to leave behind. Once again, it looks at that percentage and it's going to bring over the remaining 100%, if that is what you choose, of the budget. Now, we all know that restricted budget has rules and regulations that your institution is actually bound by. If it's unrestricted budget, then it's good for that fiscal year and that fiscal year alone. You have exceptions though. You might have grants, you might have projects that you want to take across fiscal years. So you do have the ability to set no budget on your universal form, your chart of accounts form, and then you can go to your fund type maintenance page. And let me preference that by saying, if you have built your chart of accounts on a hierarchical structure, then you can do roll-ups. You can say, maybe I only want my government grants to roll forward, or I want these projects to roll forward, these fund types. So once you set up your overrides on your fund type page, Banner on the universal setting of your chart of accounts page will say, I'm not bringing any budgets over. But then it goes to look for any overrides and it will say, oh, but I can group and bring over the grant budget. I can bring over the project budget. So Banner gives you that flexibility to bring nothing or to pick carefully what you would like to come into your new fiscal year. Once again, we're looking at the setup of your budget carry forward parameter. So you need to understand when you're looking at your chart of account parameter window, and I say you're laying the track, you really are laying the track to let Banner know how all of the processes that or procedures that you're going to be doing after this, the rules that they're going to follow. The last window or the last section of your parameter page on your chart of account page will be to tell Banner which type of documents do I want to roll forward. You have an option below. I always like to point out encumbrances because sometimes our clients get confused. They say, I thought a purchase order was an encumbrance, and it is. And a purchase order does encumber money. Banner has what's called an encumbrance page where you can actually create a document. They are E-class documents and they encumber money so that you can pay for a project. Let's say I don't have a vendor I'm going to assign this to. I'm just going to encumber $50,000 and I'm going to feed off of that for the project. That's what's meant by encumbrance, those E forms. You can say, I want all my encumbrances and all my purchase orders. If you don't use any of these, please leave them blank. You don't have to put anything in. And if you're not bringing forward purchase orders at all, then you wouldn't have any of these boxes checked. But what we're looking at is that final section of your chart of accounts page. That final track has been put in place. And now you're going to be able to actually run your fiscal year in. Now, unless this is the first time you've ever done it, you've already gone to your system data maintenance page and you've made sure that you've set parameters that will actually be able to read these system IDs so that they will know what to do with those processes when you begin to run them. The fiscal year end process is really very efficient. It's easy to run, but of course, it all depends on whether or not you have done your due diligence in making sure your periods are clean and in balance. When you begin to set up the process, there is a end of year ledger maintenance page that you go to. This is the page where you're actually going to go in and set the dates as well as all of the process codes, the naming convention for all of your process codes, because that naming convention will become part of the journal voucher that is going to be created with each one of these processes that you successfully complete. And that's how you can track these processes in your history tables. You can go to FOIDOC with that journal voucher number, and it will automatically tell you the number that you can look at and everything that came over for whichever one of these processes you were doing. Now, I've got 4 processes here, but there are actually 5 processes. I've added it, not that we will discuss it in detail, but it's your role of your HR labor. If you're going to bring that into your ledger, your general ledger, then you actually need to roll it in because HR payroll is in another module. So that 5th process that actually rolls that into finance can be done at any point in time. It is not dependent upon whether or not we've already done our financial side. So I put it here so that you know it is a process that if you're bringing over those encumbrances you need to do, but it does not have to be done on the same evening that you run your first 3 processes for the financial year-end close. Your first process that you will run is setting up your chart. This is exactly what it looks like. Remember what I said? If you've been doing this for years on FemStat, you've already kind of assigned a code to each one of these processes. Many times we just take that code and then we put the fiscal year behind it, and that becomes our journal. Those are the numbers that our journal will be consistent of. We might go 1 up, 2 up, depending on how many transactions we're bringing over. You always have to schedule the date that tells Banner when you will start doing your year-end close. The importance of this date cannot be understated. If you just go in and arbitrarily put in the last day of the month and then realize the last day of the month is Sunday and you really want to do this, on Friday, then you actually have to put in the 28th because Banner looks at that date. And if you go in on the 28th and try and run these processes, don't forget Banner has a built-in calendar. It will say, no, I'm sorry. You told me not to let you do this till the 30th. You can't run them now. You can create this calendar and put it out there. If you're not sure, you can create this calendar and say, as of June 1. Banner will let you start the processes anytime on June 1 or any day that comes after June 1. So be mindful of that end date that you put here and make sure that it actually conforms when you actually want to start running these processes. The other thing that you really need to do before you start off, run your control reports. I would hope that everyone who is in attendance runs these control reports at the very least monthly. You can run these weekly, you can run them bi-weekly, you can run them monthly. And what they do is they make sure that your cash is in balance. They make sure your general ledger and your subsidiary ledger controls are in balance. And if they're out of balance, you really need to correct that before your year-end close. Because if you close a fiscal year out of balance, it's going to roll forward that out of balance condition into your new fiscal year. And there's no way to correct that from the front end. You're going to have to find it and put in a journal and make a statement to your financials. So the importance of running these control reports and making sure that everything remains in balance on a monthly basis, it's great because now I'm not waiting for 12 periods to find something that happened in period 3. And wow, that took a lot of work to go through. I know everything was in balance this month, this month, this month. I know it went out of balance this month. That's where I will begin my reconciliation. I would also suggest that if you know you have POs that you're going to roll forward, and you have POs that do not have a balance, these are $0 POs, and they can happen for many reasons. Perhaps you paid it in full and didn't do it as a final payment on the accounts payable side. So the invoice was paid, there's no money on the PO, but that status indicator on the header is still set to open. If you're going to roll forward purchase orders, Banner will roll forward any purchase order that is still open. So you can imagine there's really no need to bring forward a PO that should have closed in old year into new year simply because we didn't close it. You can run a batch close process. You can set the minimum tolerance to $0. And the only thing this process does is it goes through and it looks at every PO that has no money on it, $0, and it closes it. It actually puts that C at the header. So now when you begin to roll those POs forward, it's not going to pick up anything that is already closed. It's going to keep your house clean. Remember, garbage in, garbage out. You also know that you can, based on what you've set up, if in fact you're going to be cleaning up encumbrances and rolling things forward, you want to make sure you've set your fund type override in case you're saying, I'm not bringing over anything, oops, except my grants. And then you want to run your depreciation. Yeah, whether you're using baseline Banner fixed assets to run your depreciation, or you're using a third party and you're actually putting that information in through a journal voucher, you want to do that before you begin your process. And whenever, if it's the last day of the month, if it's the 28th of the month, whenever you get ready to actually run your year in, then it's important that you wait till the end of the day when everyone is out of the system, and then you turn off your sleep-wake mode, those things that automatically feed in, because you need to understand, Banner is now trying to give you a set dollar amount that was in old year and bring that same dollar amount to new year. And if you're letting these processes run in the background, from the time you do your first balance forward, and I've got processes running, and I get over to the new year, my numbers can be skewed. So it's really important that you turn these job schedulers, your sleep-wake modes off, and you run everything manually as you do each process. If you've had numerous problems in the past and it's taken more months to clean up than to actually do the job, why didn't you do a backup? If you hit a problem and something really goes awry, oh, I can start over again because I have everything I need to be successful this time. Rolling your general ledger balance forward does a number of things, but what you need to do on your fiscal year end is you need to make sure that you have your new fiscal year created and that you have at least period 1 open. You have no idea how easy it is to forget to do that. You go through all these processes, you look in the new year and there's nothing there. Why? Because all those processes got right up to the new year door. They knocked and knocked, it was locked, they couldn't get in. So it really is important that you keep a checklist. I don't care how many times you've done it. Everybody's wearing multiple hats. You've got 5 people on each side of you talking. It's easy to forget little things, but these little things can really trip you up. So by all means, keep a checklist. Know you have to go through and do these processes before you get started. Once you've got all your ducks in a row, you're going to begin your year-end process. The first one will be to bring your general ledger balance forward. So what you want to do is you really want to run that trial balance, and you want to save that copy to your new year folder, because you're going to run that before you do your balance forward. And then as soon as you've completed your balance forward, you're going to run that exact same report again. And guess what? They're going to match. And that way, you know, what you ended up with in your old year is exactly what you're starting with in your new year. Because when you run this process, it goes back, it reads what you put in your chart of accounts setup, and then it begins to bring these things forward. So it's really important that you understand it's bringing it into your accounting period 00. That is your beginning balance, all right? That's going to be your control. Now you've got an accrual period that is opened up. Always, after each process, please go back to the end of the year maintenance table. I call it the calendar, because what you will see once you've had a successful process go through is it will actually place that journal voucher, the completed journal voucher with that end number as ended. It will actually add a date that says this process was completed on this date. So you have a start date, you have an end date, you have your beginning process code, and you have your beginning process end number once that code has been completed. Okay. After you've actually done that, what is it I'm reminding you to do? Go back and run your trial balance report again, because it's important that you want to see it. You want to make sure it's balanced. That's the quickest way to do that and move on to the next process. I save these reports and I put them in a folder, and every year I have a fiscal year end folder, fiscal year end, 19, fiscal year end 20. But when I look to that folder, I know that I have my backup documentation that supports the fact that everything happened and everything was in step and in tune. Going back to my calendar to make sure I've got those updates so that when I move forward, I will not be disappointed, because Banner will not let you move forward with the next process until you have successfully completed the prior process. So that's why you're always going to say, please go back and check and make sure that it's showing your new journal number and your ending date. Okay. So these are things that really ensure you're doing everything appropriately. Once you have done your roll of encumbrance into your current year, now you can no longer make change orders or cancel against an encumbrance in prior year. However, you can make any of those changes into your new year, all right? So there's a period there where once you've rolled them over, you're working on this end until you get to a point, and we'll talk to concurrent year processing a little later down a few slides from now. If you are running Banner's approval queue process, then you have the ability to actually roll things that are sitting in approval queues that have not been approved yet forward so they don't get trapped. Just like any process, if you close a period and you've got some incomplete documents in there, they're trapped. Banner says, go ahead and make sure you do this and roll everything that you didn't have time to do an old year forward so that these things don't get trapped. You do need to understand that after these processes, you're running that Trin-I, Trin-R, and posting process, because now it's so important, even though you're actually saying, but I'm working in finance, why am I interfacing it? Because these are huge journals. This is a big deal. And Banner wants to make sure all your ducks are in a row, everything's in balance before it actually brings it in to your new fiscal year. Once you've done that, we're going to go with our budget carry forward. Once again, it's reading whatever you set up on that your chart of account parameter page, and it's going to pick and choose just the budget you told it to roll forward. And if you said I'm not rolling forward any budget, but you did your overrides on your fund type page, then it will actually go there and look at the overrides on your fund type page, and it will bring those in and leave that restricted money behind. Once again, we're going to be running our Trini processes to make sure everything posts, and we're always going to go back to our calendar to make sure I've got a document ending number and I've got a date performed that has generated. Because the last thing you want to do is move on to the next thing and have it throw an error. That can be a little stressful and cause you to panic. But if you check that calendar between each one of these processes, you're golden. Now, this last process is typically not done on the same night that you do the other three. Why? Because this is your clop. This is your close. This is the process that truly closes everything out, empties your control accounts, set them back down to zero so that you can make sure things are in control, close out your fiscal year, close out your accrual. This is the process that finalizes your year-end close. And it's okay to keep this open for a week, 2 weeks, a month. You can laugh. I've had clients keep this open for 5, 6 months. They just want to make sure that everything is good, that everything's accountable, so that their financial reports will come out flawlessly. So your closing of your final step to close does a number of things, but remember, it does not have to be performed on the same night that you do your first 3. Once again, you're looking at all of your year-end processes. You're also noticing that I put the labor process out there. That does not have to happen on the same night that you're doing your financial close either. I just want to make sure that you know there are technically 5 processes. Finance is responsible for those first 4 that you see there. You work in conjunction with your HR payroll position folks to get to that next piece. Now, I'd like to thank you for taking the time to attend and actually giving me the opportunity to hopefully impart some additional knowledge and information on what it takes to actually do a year-end close.
Thank you so much, Grace. I'm sure this has been helpful to the attendees. I know that I certainly learn something every time I listen to you talk about this. So I appreciate the depth and the breadth of the conversation. So we'd certainly like to open it up to any questions anyone might have. If you'd like, you can enter those questions in the chat. Otherwise, feel free to come off mute and ask whatever you'd like to ask.
And while you are thinking about that, please don't be shy. We're here to help you get a better knowledge. If you have a problem or a concern or a question that has always kind of plagued you, let us know. That's what we're here for. We're only here to help. We don't want to hurt you. We just want to help you. You are going to get an additional documentation, and I thought I had it pulled up, but I guess I don't. But you're going to get additional documentation that's going to give you a list of reports and processes that I recommend you run monthly. They're cleanup reports, matching reports, if you're using 3-way matching for receiving. And they're once again, I've listed your control reports to make sure that things are kept in balance. So not only will you be able to see or review this PowerPoint, but you'll actually be able to have a checklist of things that you should be doing on a regular basis to ensure that your ledger stay in balance and your year end becomes completely non-eventful.
So I'm not, excuse me, seeing any questions in the chat, but certainly that's open. And again, if you'd like to unmute yourself, please feel free to come on live with us and chat. This is the first of what we expect to be some regular series on Banner Finance to help supplement training or bring new information to you. You can always see our upcoming webinars on the Ferrilli website at the What's Happening page. We look forward to more of these. And if you'd like more information about Ferrilli and our services, that information is on this slide. So with that, not seeing any other questions, thank you for taking the time to join us today. Know you can reach out to your account exec at Ferrilli or just to info@Ferrilli at any time with questions. We like to say we enjoy answering questions and offering opinions. That's free. So feel free to reach out. With that, I know, Grace, you have some of the folks on this webinar you're going to be meeting with shortly. So we look forward to seeing you at the next finance webinar. Thank you.